Hey everyone, and welcome back to Talk Tickers. Today we are going deep on Prudential Financial's Q4 2024 earnings call. Buckle up, because it's a doozy. We're talking record sales in some areas, a leadership shakeup, and a peek into the future of this financial powerhouse, 150 years young. I'm curious what really jumped out at you from this call.
Well, what's really fascinating here is the contrast. We see Prudential reporting lower than expected Q4 earnings, primarily due to a high volume of those large individual life insurance claims. Yet they're still highlighting positive momentum for the full year of 2024. It's a bit of a puzzle, wouldn't you say?
Yeah, okay, let's unpack this a little. So on the one hand, we've got these unexpected claims hitting their bottom line, but then on the other hand, they're boasting strong full-year sales across their retirement and insurance businesses. And let's not forget PGM, their global investment manager, is flexing some serious muscle with strong investment performance and positive net flows. So short-term hiccup versus long-term growth story. What's the takeaway for our listeners?
I think it's a classic case of not judging a book by its cover, or in this case, an earnings report by a single quarter. If we sort of connect this to the bigger picture, Prudential is emphasizing a transition to a higher growth, more capital-efficient company. They're playing the long game, and these full-year results seem to be pointing in the right direction.
Got it. So short-term pain, potentially long-term gain. But let's not gloss over this leadership shakeup. Andy Sullivan stepping in as the new CEO effective March 31st. That's a big deal. Caroline Feeney is taking on an expanded role, overseeing global retirement and insurance businesses. And we've got a new player entering the field, Jacques Shapouche as CEO of PGM. Talk about a power play.
Yeah, it's a generational shift for sure. And it comes at a pivotal moment as Prudential celebrates its 150th anniversary. This new leadership team will be responsible for steering the company towards those ambitious growth and efficiency goals. The question is, can they deliver?
All right, time to roll up our sleeves and dive into the nitty-gritty of these business segments. Let's start with the behemoth in the room, PGM. They're managing a staggering $1.4 trillion in assets. Right.
That's right. A 6% increase from last year, fueled by a combination of market appreciation, net flows, and that strong investment performance we mentioned earlier. But here's where it gets really interesting. Their private alternatives platform saw a whopping 37% growth in private credit origination. That's a sign they're not just playing it safe. They're wading into potentially higher risk, higher reward waters.
Okay, so PGM is clearly not afraid to make bold moves. Now, let's shift our focus to their U.S. businesses. What's the story there?
Well, their retirement strategy segment is singing a sweet tune. They achieved strong sales, with institutional sales hitting their highest point since 2012. Think about that for a second. Their best year in over a decade. And individual retirement sales. They also saw their best quarter in a decade. Clearly, they're tapping into a powerful trend here.
I mean, who isn't thinking about retirement these days? Seems like a smart place to be. What else is happening stateside?
Their group insurance segment is also chugging along nicely, with sales up 4%, mainly driven by growth in supplemental health products. And then there's their individual life business, which hit a record high for quarterly sales, up 23% from 2023.
Hold on, 23%? That's huge. What's fueling that kind of growth?
A couple of things. First, they've been strategically expanding their product offerings, including a shift towards more capital-efficient products. And second, they've seen a surge in estate planning sales, likely driven by economic uncertainty and people wanting to get their affairs in order, for a smart move on Prudential's part to capitalize on that sentiment.
Totally agree. So lots of positive signs in their U.S. business. But this is a global company, so let's zoom out and see what's happening internationally.
Internationally, they're also seeing a healthy 6% increase in sales compared to the previous year. Growth in Japan is being driven by new retirement and savings products, while emerging market sales are on fire with a 12% jump, particularly in Brazil.
Brazil. Interesting. So they're finding pockets of growth all over the map, which seems to support their push towards higher growth overall. But they've also laid out some pretty ambitious financial targets to achieve that growth, haven't they?
They have. They're projecting annual core earnings per share growth of 5% to 8% through 2027 and are aiming for a return on equity between 13% and 15%. Those are bold goals. And they'll require a disciplined approach to capital deployment.
Right. So how are they planning to hit those numbers? What's the game plan?
They're focusing on three key areas: investing in organic growth, returning capital to shareholders through dividends and buybacks, and exploring potential mergers and acquisitions. It's a balanced approach that aims to satisfy both growth-hungry investors and those seeking steady returns.
And speaking of returning value to shareholders, they just announced an increase to their dividend, didn't they?
They did. It's the 17th consecutive year they've increased the common stock dividend, which is a testament to their commitment to rewarding investors.
Okay, so we've covered the earnings overview, the leadership transition, and a deep dive into their business segments. But there's one big question looming in the background. Those large individual life insurance claims that hit their Q4 earnings. Is this a canary in the coal mine or just a blip on the radar?
It's tough to say for sure. Large claim activity can fluctuate from quarter to quarter. However, it's definitely something to keep an eye on. If this trend continues, it could force Prudential to adjust its underwriting practices or pricing.
Good point. Now, I want to highlight something that really piqued my interest in this call. Prudential's commitment to Prismic, their sponsored reinsurer. They're making some interesting moves, especially in the Japanese market. What's your take on that?
What's fascinating about Prismic is its potential to become a major growth engine for Prudential, particularly in Japan, which is grappling with new capital regulations. As they gain experience with these reinsurance deals, they could unlock significant value from their existing business and potentially even tap into third-party opportunities.
I'm with you on that. It's a clever strategy to leverage their risk management expertise and create a whole new revenue stream. I think we'll be hearing a lot more about Prismic in the coming years. But before we get ahead of ourselves, let's take a closer look at another bright spot in their portfolio, their retirement business. They seem to be riding a powerful demographic wave here, both in the U.S. and internationally.
Absolutely. They're capitalizing on the growing need for retirement solutions as populations age and people live longer. But what's truly impressive is how they're weaving technology and innovation into their retirement offerings.
Okay, you've got my attention. Tell me more about these innovative solutions. What are they doing that's so different?
Well, for starters, they're leveraging data analytics and artificial intelligence to create more personalized retirement planning experiences. They're developing digital tools and platforms that make it easier for people to manage their retirement savings, track their progress, and make informed decisions. It's not just about selling products anymore, it's about creating a holistic ecosystem around retirement planning.
So they're not just helping people save for retirement. They're helping them navigate the entire retirement journey. That's smart. But let's not forget about the elephant in the room. Regulation. The financial services industry is constantly facing new rules and regulations, and that can have a big impact on a company's bottom line.
What's the regulatory landscape looking like for Prudential right now?
One of the most significant developments in recent years has been the implementation of the Dodd-Frank Act in the U.S. This sweeping legislation has introduced a wide range of new rules for financial institutions, and Prudential has had to adapt accordingly.
How have they responded to these new challenges?
They've made substantial investments in compliance and risk management to ensure they meet the requirements of these new regulations. They've also adjusted their business practices and product offerings to stay on the right side of the law. And they're not just focusing on U.S. regulations, they're also closely monitoring developments in other markets where they operate, like Japan, which is implementing new capital regulations for insurers. So they're playing by the rules, which is good news for investors. But let's face it, regulatory compliance isn't exactly the sexiest topic. Let's spice things up a bit and talk about something a little more exciting. Technology. It's transforming every industry, and financial services is no exception. How is Prudential leveraging technology to enhance their business?
They're doing a lot. One key area is digitizing their customer interactions. They're developing online platforms and mobile apps that make it easier for customers to access information, manage their accounts, and interact with Prudential colds. They're also using data analytics and artificial intelligence to improve their risk assessment and underwriting processes, which helps them make more informed decisions and provide more personalized products and services.
So they're using technology to become more efficient, more effective, and more customer-centric. Makes sense. But let's not forget about the buzzy new kid on the block, blockchain. Is it all hype, or does it have real potential to disrupt the financial services industry?
Blockchain definitely has potential, especially in areas like payments, securities, settlement, and identity verification. By enabling secure and transparent transactions, it could revolutionize how we move and manage money.
So faster, cheaper, and more secure transactions. Sounds promising. But are there any challenges or roadblocks that could hinder blockchain's adoption?
There are a few hurdles to overcome, such as scalability and regulatory uncertainty, but it's a technology worth keeping an eye on.
Agreed. And while we're on the topic of disruptive technologies, we can't ignore the elephant in the room. Cryptocurrency. Is it the future of money, or just a passing fad?
That's a question that could spark a debate for hours. Cryptocurrency is certainly gaining traction, but it's still a volatile and relatively unregulated market.
So proceed with caution, as they say.
Absolutely. It's a fascinating case with the potential to disrupt traditional financial systems, but investors need to do their homework and understand the risks involved.
All right, we've covered a lot of ground in this deep dive into Prudential's earnings call. We've explored their financial performance, their strategic priorities, the key trends shaping the industry, and the regulatory challenges they face. But as you know, there's always more to uncover.
Always. And in part 2, we'll take an even deeper dive into their financials and explore some of the key trends shaping the financial services industry. Stay tuned. Welcome back to Talk Tickers. You ready to keep digging into Prudential's financials?
Absolutely. I'm especially curious about their free cash flow conversion rate. They're targeting a 65% conversion of net income into free cash flow. That seems pretty healthy, wouldn't you say?
It is a solid number, and it gives them a lot of flexibility. It's like having a well-stocked pantry. You've got plenty of options for what to cook up.
Okay, so let's break down this financial recipe. What are they planning to do with all that free cash flow?
Well, they've got a three-pronged approach. Roughly 30% to 40% will be reinvested in organic growth initiatives, which makes sense given their ambitious growth targets.
Right? They've got to fuel those growth engines.
Yeah.
But what about the rest of that cash? Are they going to hoard it like a dragon guarding its treasure?
Not at all. Shareholders can rejoice because Prudential is committed to returning a sizable chunk of that cash back to them. They're aiming to pay out 35% to 45% in dividends, maintaining their impressive streak of dividend increases.
Music to any income investor's ears.
Yeah.
And what about buybacks? Are they planning on repurchasing any shares?
Absolutely. They've allocated 20% to 30% of their free cash flow towards share buybacks, and they've already authorized a cool $1 billion for buybacks in 2025. So they're reinvesting in growth, rewarding shareholders with dividends, and buying back shares. It's a balanced capital allocation strategy that should appeal to a wide range of investors.
It's like they're hitting all the right notes for investors.
Mm-hmm.
But with all this talk of cash flow and capital allocation, it's easy to get lost in the numbers. Sometimes we need to step back and remember that behind all these financial metrics are real people.
That's an important point. Prudential's business is ultimately about helping people achieve financial security and peace of mind, whether it's planning for retirement or protecting loved ones with life insurance. They're providing products and services that address some of life's biggest concerns.
Exactly. And as the financial landscape continues to evolve, it's crucial for companies like Prudential to stay focused on meeting the changing needs of their customers.
Absolutely. They can't just rest on their laurels. They need to be constantly innovating and adapting to stay ahead of the curve. And speaking of changing needs, one of the big themes we've been discussing is the growing demand for retirement solutions. What are some of the key trends driving this demand, and how is Prudential positioning itself to capitalize on them?
I'm glad you brought that up. It's a topic that's near and dear to my heart, and I know a lot of our listeners are thinking about retirement too. So let's break it down.
Well, one of the most obvious drivers is demographics. We're seeing aging populations in many developed countries, including the US and Japan. This means more people are entering retirement and needing to secure their financial future. It's a massive market opportunity, and Prudential is clearly targeting it with their retirement strategies business.
They're not just offering traditional retirement products like annuities and pension risk transfer solutions, are they? What else are they doing to cater to the needs of today's retirees?
They're getting creative. One area they're focusing on is helping people manage longevity risk. People are living longer, which means their retirement savings need to last longer. Prudential is developing products and strategies that address this challenge, helping people avoid the nightmare scenario of outliving their savings.
That's a huge concern for a lot of people. It's not just about saving enough. It's about making sure your money lasts. What other innovative solutions are they cooking up?
They're also exploring ways to incorporate healthcare costs into retirement planning. As healthcare expenses continue to rise, it's becoming increasingly important to factor those costs into retirement projections. You don't want to be blindsided by unexpected medical bills in retirement and see your carefully crafted plans go up in smoke.
Absolutely. Healthcare costs can be a real wild card in retirement planning. It's smart of Prudential to address this head on. What else are they doing to stand out in the crowded retirement market?
They're embracing personalization. They're leveraging technology and data analytics to create customized solutions that address the unique needs of each individual. It's a move away from the one-size-fits-all approach to retirement planning and towards a more tailored experience.
It's like they're saying retirement looks different for everyone, and we're here to help you create a plan that fits your specific goals and circumstances. That's a powerful message. But let's shift gears for a moment and talk about another trend that's shaping the financial services industry, the increasing demand for ESG-focused investments.
That's right. Environmental, social, and governance factors are becoming increasingly important to investors, especially younger generations who are more conscious of the impact their investments have on the world.
And how is Prudential responding to this growing demand for sustainable and responsible investments?
They're not just jumping on the bandwagon, they're making real commitments. They've pledged to integrate ESG considerations into their investment process and are developing ESG-focused investment products and strategies that align with the values of their clients.
So they're putting their money where their mouth is when it comes to ESG. I think that's crucial for any company that wants to stay relevant and attract investors who care about more than just financial returns. But let's be honest, the financial services industry isn't exactly known for being cutting edge when it comes to technology. How is Prudential keeping up with the rapid pace of technological advancements?
They're actually doing a lot to embrace the digital transformation that's sweeping across every industry. One key area they're focusing on is digitizing their customer interactions. They're developing online platforms and mobile apps that make it easier for customers to access information, manage their accounts, and interact with Prudential.
So they're making it more convenient for people to do business with them. But it's not just about convenience, is it? What else are they doing with technology?
They're using data analytics and artificial intelligence to streamline their operations and improve their decision-making. This helps them make more informed decisions and provide more personalized products and services. They're also exploring the use of blockchain and other emerging technologies to create new opportunities and stay ahead of the curve.
It sounds like they're taking a proactive approach to technology, which is essential in today's rapidly evolving world. But let's not forget about the ever-present force in the financial services industry, regulation. It's a complex and constantly changing landscape. What are some of the key regulatory trends that Prudential is facing, and how are they navigating these challenges?
One of the most significant regulatory developments in recent years has been the implementation of the Dodd-Frank Act in the U.S. This sweeping legislation introduced a wide range of new rules and regulations for financial institutions, and Prudential has made significant investments in compliance and risk management to ensure they're meeting the requirements. They've also adjusted their business practices and product offerings to comply with the new rules.
So they're adapting to the changing regulatory landscape in the U.S., but they operate in a global market, don't they? Are there any other regulatory challenges they're facing?
They're also keeping a close eye on regulatory developments in other markets where they operate. For example, in Japan, they're navigating the implementation of new capital regulations for insurers. Regulatory compliance is a top priority for Prudential, as it should be for any financial institution.
Absolutely. It's something that investors should pay close attention to when evaluating any company in this industry. A company's ability to navigate the regulatory landscape effectively can have a huge impact on its long-term success. But let's be honest, talking about regulation can be a bit dry. Let's shift gears and talk about something a little more exciting. Remember how we were talking about Prudential's push into the Japanese market with Prismic? Let's go back to that for a minute.
I'm happy to circle back to that. It's a really interesting development, and I think it has the potential to be a game changer for Prudential. As we mentioned earlier, Japan is grappling with new capital regulations, which is creating opportunities for reinsurers like Prismic. Prudential is leveraging their expertise in risk management to carve out a niche in this growing market, and I think it's a smart strategic move.
I agree. It's like they're taking their core competencies and applying them to a new market with a lot of potential. But the reinsurance market is pretty competitive, isn't it? What makes you so confident that Prudential can succeed in this space?
They've got a few things going for them. First, they have a strong track record in risk management. They've been in the insurance business for over 150 years, so they know a thing or two about assessing and managing risk. Second, they have a deep understanding of the Japanese market. They've been operating in Japan for decades, so they have the local knowledge and expertise to navigate this complex market. And third, they're bringing innovative solutions to the table. They're not just replicating what others are doing, they're developing new and differentiated products and services that are tailored to the specific needs of Japanese insurers.
Those are all good points. But it's still a risky move, right? There's no guarantee of success in this market. What if they face unexpected challenges or competition heats up?
Of course, there's always a degree of risk. No investment is completely risk-free, but I think Prudential is taking a calculated risk. They're not blindly jumping into this market. They've done their homework, they have a solid plan, and they're executing it strategically. Of course, only time will tell how it all plays out, but I'm optimistic about their prospects.
Okay, so we've talked about Prudential's financials, their strategic focus on retirement solutions, their commitment to ESG, their embrace of technology, and their foray into the Japanese reinsurance market. But there's one more area I want to explore. They've been making some interesting moves in the area of digital health. What can you tell us about that?
That's another area where Prudential is showing their willingness to innovate and adapt to changing market dynamics. They've been investing in digital health startups and partnering with technology companies to develop new solutions that address the growing demand for personalized and convenient healthcare. They see digital health as a key growth area for the future, and they're positioning themselves to be a leader in this space.
What are some of the specific initiatives they're pursuing in digital health?
They're exploring a wide range of possibilities from virtual care platforms and remote patient monitoring tools to AI-powered diagnostic tools and personalized health recommendations. They're also looking at ways to integrate digital health solutions into their existing insurance products and services, creating a more holistic approach to health and wellness.
It sounds like they're taking a comprehensive approach to digital health, covering everything from prevention and early detection to treatment and ongoing care. That's really impressive. But let's shift gears again. We've talked a lot about the positive aspects of Prudential's business, but no company is perfect. What are some of the challenges or risks that investors should be aware of?
That's a great question. It's important to look at both sides of the coin. While Prudential has a lot of strengths, they also face some headwinds. One of the biggest challenges is the low interest rate environment. This puts pressure on their investment income and can make it harder to generate attractive returns. Another challenge is the increasing competition in the financial services industry. They're facing competition from both traditional players and new fintech disruptors, which is putting pressure on their margins.
So they're navigating a complex and challenging environment, but they seem to be doing a good job of adapting and innovating. What are your overall thoughts on Prudential as an investment?
Overall, I think Prudential is a well-managed company with a strong track record and a solid strategic vision. They're well-positioned to capitalize on the growing demand for retirement solutions, and they're making smart moves in areas like technology and digital health. Of course, there are always risks to consider, but I think the potential rewards outweigh the risks. They're a company that's worth watching closely.
Great insights. We've covered a lot of ground in this deep dive into Prudential's earnings call and the broader trends shaping the financial services industry. But as we all know, the learning never stops. What advice would you give to investors who are trying to make sense of this complex and ever-changing world?
My advice is simple. Stay curious, stay informed, and don't be afraid to ask questions. The financial world is constantly evolving, and the best investors are those who are constantly learning and adapting. Read industry publications, follow thought leaders, and engage in discussions like this one. The more you know, the better equipped you'll be to make informed investment decisions.
Excellent advice. All right, that's a wrap for part 2 of our deep dive into Prudential's earnings call. In part 3, we'll zoom out even further and explore some of the mega trends that are shaping the future of the financial services industry. Stay tuned. Welcome back to Talk Tickers. We've spent the last 2 parts digging deep into Prudential's recent earnings call, analyzing their financials, strategic moves, and how they're adapting to the changing landscape of the financial services industry. But now I'm ready to step back and look at the bigger picture. What are the megatrends shaping the future of finance? What should investors be paying attention to? Expert speaker, give us the lowdown.
It's a fascinating time to be in the financial world, that's for sure. We're seeing a convergence of forces, technological advancements, shifting demographics, evolving consumer expectations, and a growing awareness of social and environmental issues that are fundamentally reshaping the industry. It's both exhilarating and a little daunting, wouldn't you say?
Exhilarating because of the opportunities, daunting because of the pace of change. But that's what makes it so exciting, right? So let's dive into some of these megatrends. First up, technology. It's transforming every industry, and finance is no exception. What are the key technological advancements that are shaking things up?
Well, one of the most transformative technologies is artificial intelligence, or AI. It's being used in a multitude of ways, from automating tasks and improving efficiency to personalizing financial advice and detecting fraud. Imagine having a financial advisor available 24/7 who can analyze your spending patterns, identify potential savings opportunities, and recommend investments tailored to your risk tolerance and financial goals. That's the power of AI.
AI is like having a super smart financial assistant in your pocket. But it's not just about making things easier for consumers, is it? How is AI impacting the financial industry as a whole?
It's having a profound impact on how financial institutions operate. AI is being used to streamline processes, reduce costs, and improve risk management. For example, banks are using AI to automate loan approvals, detect fraudulent transactions, and personalize customer interactions. Investment firms are using AI to analyze market data, identify investment opportunities, and manage portfolios more effectively. It's truly a game changer for the industry.
AI is like the secret weapon that's giving financial institutions a competitive edge. But let's not forget about another technological force that's making waves: blockchain. It's the technology behind cryptocurrencies like Bitcoin, but its potential applications extend far beyond digital currencies. What are some of the other ways blockchain is being used in finance?
Blockchain is essentially a digital ledger that allows for secure and transparent transactions without the need for intermediaries. This has the potential to revolutionize many aspects of finance, from payments and money transfers to securities trading and supply chain financing. Imagine being able to send money to someone on the other side of the world instantly and for a fraction of the cost of traditional methods, or being able to track the provenance of a product from its origin to your doorstep with complete transparency and confidence. That's the promise of blockchain.
Blockchain is like the ultimate trust builder in the financial world. It's still early days, right? What are some of the challenges that need to be addressed before blockchain becomes mainstream?
There are certainly some hurdles to overcome, such as scalability, regulatory uncertainty, and the need for greater adoption. But the potential benefits of blockchain are so significant that many experts believe it's only a matter of time before it becomes an integral part of the financial system.
It's like the Internet of Money. It has the potential to connect everyone in the world financially, regardless of their location or economic status. But let's move on to another mega trend that's reshaping the financial landscape. The expectations of consumers are changing rapidly. They're demanding more personalized, convenient, and transparent experiences from their financial providers. How is the industry responding to these demands?
Financial institutions are realizing that they need to become more customer-centric if they want to survive in this new era. They're investing heavily in digital technologies to create seamless and personalized experiences for their customers. They're also embracing open banking, which allows consumers to share their financial data with third-party providers, enabling them to access a wider range of financial products and services.
It's like the power is shifting from the institutions to the consumers. Consumers now have more choices and more control over their financial lives. But let's not forget about the social and environmental issues that are increasingly influencing investment decisions. ESG investing, which stands for environmental, social, and governance, is becoming more mainstream. What's driving this trend?
Investors are realizing that they can make a positive impact on the world while also achieving their financial goals.
Yeah.
They're demanding that companies operate in a sustainable and responsible manner, and they're putting their money where their values are used. ESG factors are no longer just a niche consideration. They're becoming an integral part of investment decision-making.
It's like a win-win situation. Investors can do good and do well at the same time. But let's get down to brass tacks. What are some of the specific investment opportunities that are emerging from these megatrends? What should our listeners be paying attention to?
There are many exciting opportunities emerging across the financial spectrum. In the tech space, there's a lot of interest in companies that are developing innovative solutions in areas like AI, blockchain, and cybersecurity. In the consumer space, companies that are providing personalized and convenient financial experiences are attracting a lot of attention. And in the ESG space, companies that are leading the way in sustainability and social responsibility are seeing strong investor demand.
So there's something for everyone, regardless of their investment style or risk tolerance. But let's wrap things up with a fun segment. It's time for our This Is Not Financial Advice segment, where we throw out a totally wild, but maybe not so crazy, trade idea inspired by what we've discussed today. Remember, this is for entertainment purposes only. Don't blame us if your portfolio does a swan dive. Expert speaker, what's your outrageous but plausible trade idea?
All right, hear me out. What if Prudential's bet on digital health and their expansion into the Japanese reinsurance market with Prismic turns out to be even bigger than anyone anticipates? Could they become the dominant player in both of these rapidly growing sectors?
Ooh, I like where you're going with this. So what's the play here?
A savvy investor might consider a long-term call option strategy on Prudential, betting that their share price will soar as they capture market share in these emerging sectors. Or, for a more diversified approach, consider a basket of companies that are poised to benefit from the growth of digital health and reinsurance in Asia. Remember, this is purely speculative. Do your own research and don't invest more than you can afford to lose.
Love it. A bold play for those who dare to dream big. All right, listeners, that's a wrap for our deep dive into Prudential Financial and the mega trends shaping the financial services industry. We've covered a lot of ground, but remember, this is just the beginning. Keep exploring, keep learning, and keep asking those tough questions. The financial world is constantly changing, and the best investors are those who are constantly evolving with it. Thanks for joining us on Talk Tickers.
Until next time, stay curious and happy investing.